Hi students, I'm Sonia from Guru, starting a new session on the budget of India. I'll be starting the session, but before starting, I wish to tell you, as this session is going to be in the English medium completely, this session is primarily for our students from South India, is primarily for our students from Northeast India, those who are unable to understand Hindi well. That is why we actually record a complete session for them, which is going to be completely in English medium to help them basically. If the students who are not comfortable with the language, they can switch to the session in Hindi medium. That is also there in the playlist. That session was recorded in Hindi medium for obviously all the students who are able to understand Hindi. I'll start the session, but before starting, if you understand everything, I'll try my level best to make you understand. Whatever you read on the screen, I'll actually put my best of the best efforts to make you understand. Whatever I'm teaching you, you have to learn that, because every question is significant from the perspective of government job exams or any competitive exam. Because if you have current affairs, this session is going to be beneficial. Current affairs, because this happened recently, there were some announcements in the budget of Government of India. Obviously, this session is of current affairs only, but I'll be starting from here on. Press the like button if you like the session, if you understand everything. Share the video with your friends so that they can also understand the budget a bit. And please do subscribe to Vidya Guru's YouTube channel. Do press the bell icon so that you can actually receive the notifications of all the exam relevant videos which we upload. And they'll be obviously beneficial if you watch them. I'll start from here on. I'll start with budget first of all. What is a budget? When you actually understand the term, if you understand the term, I'm okay with it. I'll be explaining further points, but I wish to give a brief of the budget. What is budget? Let's say if you are at your place, if you are at your home, you have some budget. What sort of budget? That means there is a source of income. There are multiple sources of incomes from where you earn money. And there are places where you spend money too. So when you create a complete budget sort of thing for your house, that sort of budget is made by the Government of India also, incoming and outgoing of Government of India. That's what we are going to learn today. Income and expenditure payments of Government of India, that is budget. I'll start with GDP growth from here on. The first point which is there on your screen. GDP growth for financial year 2020 to 2021. That means we are talking about this current year, which is going to come to an end on 31st of March. 2020 to 2021. That means our financial year comes to an end on 31st of March. That means this year, we'll be wrapping up this financial year. So referring to this year only, this financial year, GDP growth rate minus 7.7%. Yes, read that carefully. It is not 7.7%. It is minus 7.7%. GDP growth for the next year, the projection is 11%. Minus 7.7% this year, and they are projecting GDP growth will be 11% the next year, the very next financial year. And they show that recovery curve is going to be V-shaped. V-shaped, they are trying to tell you if the economy fell, the economy collapsed, but it is going to recover rapidly. It is going to recover very, very expeditiously, very, very quickly. So it is going to be a V-shaped recovery. That means if the recovery happens, it is going to be very, very speedy. So the recovery curve will be V-shaped. That's what they have explained. Nominal GDP growth. GDP is gross domestic product. That's what I wanted to tell you. Here I'm going to talk about nominal GDP growth. What is that? I'll be explaining it to you that also. But I'm saying it is written financial year 2021 to 2022. That means referring to the next year, which is going to be 15.4%. Must be thinking it is very high. Read that carefully. What is the definition of nominal GDP growth? Nominal GDP growth means which is equals to real GDP growth plus inflation. Inflation, that means we are saying things will be expensive. Inflation is that where things will be, costly for you guys. So that sort of thing, inflation you have to add it in real GDP. That means if the real GDP shown here is 11%, 21, 22, 11%. I'm referring to nominal GDP for the same year. So I am saying if 11% is GDP, real GDP, and if nominal GDP is 15.4%, they are trying to say if you actually subtract 15.4, 11 from 15.4, that means 4.4 is going to be the inflation. That's what indirectly they have mentioned it. So real GDP is 11 plus inflation 4.4%. Collectively, it comes out to be nominal GDP, which is 15.4% written on your screen. Let's move ahead. Now, year is about to come to an end. When we see agricultural growth for this year, 2021, 3.4%. You must not be very happy, I know. But when you read the lower, sections, lower segments, industry growth is 9.6% and you must be very, excited about it. It is not 9.6%, it is minus 9.6%. Yes. We actually divided the sectors, divided the segments in which we are trying to write agriculture, industry, services. What was their performance? The performance was industry fell to minus 9.6%. Services growth for this year only minus 8.8%. That means agriculture was the only sector which was showing positive growth. So you can't be disappointed now, you should not be. Because agriculture was the sector, was the segment which was showing positive growth. Yes. When we move ahead, the lowest point states that services sector 54% of India's GVA. I'll explain GVA later on, like a few pages away. I'll be explaining that. Don't worry. GVA is gross value added. I'll surely explain that to you. No problem at all. I'm saying services sector, 54% of India's GVA. That means service sector contributes 54% in India's whole GVA, gross value added. Let's move ahead. Revenue deficit. There's something else here, that is fiscal deficit. Deficit means loss. Deficit means loss. When we read it revenue deficit, we need to understand it is some kind of loss. Fiscal deficit, it is also some kind of loss. What are they actually? I'll be explaining them first before telling you what percentage we are going to experience it the next year or maybe this year. Let's talk about it. Fiscal deficit is basically the difference between total revenue and total expenditure of government. What government earns, revenue, and what government spends, that is total expenditure. The difference between the incoming and the outgoing is fiscal deficit. That actually indicates that revenue earned is less than the expenditure. So revenue earned by the government is obviously less. That is why expenditure is more. If expenditure is more, that means you are going to face some kind of loss. That loss is fiscal deficit. But if somebody asks you what is fiscal deficit in easier terms, if you wish to explain that, fiscal deficit reflects total borrowing requirement of the government. Borrowing requirement. See, if the revenue is less and expenditure is more, if revenue is less, what they are earning, what government is earning is less, and they are spending more. So obviously, if the expenditure is more, they are spending more, the loss is bound to be there. If the loss is there, they have to actually fulfill, they have to actually curtail the loss. How are they going to do that? They are going to borrow money. And that borrowing is, they say that borrowing requirement of government is fiscal deficit. So please understand that fiscal deficit for this year, they pose 9.5% of GDP. If everything was showing negative growth, I hope you can understand that such sort of 9.5% of GDP sort of fiscal deficit is bound to be there. Such sort of loss is bound to be there. But the losses have to be curtailed. Basically, you know what happens? Let's say if next year, I cannot say that my loss is going to be 12.5%. I have to minimize the loss. Similar thing is happening here. This year, we are posing that 9.5% of GDP is our fiscal deficit, but the next year, we are going to reduce our fiscal deficit. 2021, 2022, our fiscal deficit will be 6.8% of GDP. That means the loss, we are actually reducing it. Please understand that. 9.5 for this year, the next year 6.8% of GDP. Revenue deficit, again some kind of loss. Read that carefully. Revenue deficit for this year, they are saying 7.5% of GDP. The next year, I was telling you that whatever sort of loss is there, we have to minimize it. We have to actually reduce the loss. 7.5 will be 5.1% the next year. That means the next financial year, 2021-2022, it is going to be 5% of the GDP. Now, what is revenue deficit? Let me explain that to you once. Revenue deficit refers to excess of revenue expenditure. Revenue deficit refers to excess of revenue expenditure over revenue receipts. That means revenue receipts, what the government receives, what the government earns. If it is receivings are actually less and revenue expenditure is more. If excess word, please understand the word excess here, that if the excess of expenditure is there and receipts are less, so obviously that is revenue deficit. I want to tell you something. If the word deficit is there, I'm telling you the meaning, although the meaning is not that significant, because when somebody tells you what is revenue deficit, fiscal deficit, you'll not be able to retain that till the time you don't understand the meaning. So I'm trying to explain these terms side by side so that you can retain them with full understanding of them. Let's move ahead. What sort of deficit are we going to discuss now? Okay, on your screen, primary deficit. Okay, there's another kind of loss here. Primary deficit is also a kind of loss. So what sort of loss is that? I'll explain that to you. Primary deficit is fiscal deficit. No, it is not. Primary deficit is fiscal deficit you have to deduct minus interest payments. Primary deficit is fiscal deficit minus interest payments. It is fiscal deficit, but from fiscal deficit you have to reduce, you have to subtract minus interest payments, then it becomes a primary deficit, primary loss. So primary deficit for this year, they are saying it is 5.9% of GDP. Next year, obviously every sort of loss has to be minimized. So next year they are showing that for the year 2021 and 22, it is going to be 3.1% of GDP only from 5.9%. They'll be making it the next year 3.1% of GDP. That means obviously the loss will be reduced. The lower point states current account surplus. Current account surplus. Understand the word surplus. Surplus means extra. Something additional is there. Current account deficit. Oh, no. I am saying something else. The lower point states something else. Current account surplus. Let me explain that to you in easier terms. That current account surplus is when a country has more exports than imports. That means that from exports, they are obviously earning more. They are making more. Additional, that is exports. If they have more exports and they are importing less, that means they have surplus, they have extra. So current account surplus in 17 years, it is 2% of GDP. You must be thinking in 17 years, what sort of statement is that? See, earlier for the 17 years, what used to happen, the problem was it was current account deficit for the whole 17 years. After 17 years, it comes out to be current account surplus, additional, extra, positive. That means imports were more and exports were obviously less. That is why current account deficit was there. This time it is current account surplus. That means exports are more and imports are less. So for 17 years, in the entire period of 17 years, this is going to be surplus after 17 years, that is 2% of GDP. That is why I feel that this point is super significant. This can be there in your exam. Anyway, let's move to the other question. Now, I left something in between, and that was gross value added. So what is gross value added? Gross value added is gross domestic product. No, it is not that. I'm explaining it, don't worry. Gross domestic product plus subsidies on products minus taxes on products. Read them carefully. We receive subsidies, like we receive subsidy on electricity, we receive subsidy on gas also. So such sort of subsidies. When you add GDP with subsidies on products, and when you subtract, when you reduce taxes, when you minus taxes on products, it comes out to be GVA. I'll explain that. Gross value added means when you add GDP with subsidies on products, and when you minus taxes on products, it comes out to be GVA. That is gross value added when you add GDP and subsidies and minus taxes on products. GVA growth for this year, financial year 2020-21, will be 7.2%. No, it is also minus 7.2%. So I told you at the start, you yourself have to search the sign of minus. So minus 7.2% gross value added 2020-2021. Let's move ahead. Okay, now we'll talk about ministry-wise allocation. Ministry-wise allocation, and then we'll be talking about scheme-wise allocation also. So ministry-wise allocation, budget allocation for the financial year 2021-22, the next year. Obviously, what they are allocating, obviously they'll be allocating for the next year. So Ministry of Education gets 93,224 crores. Ministry of Defence gets 4.78 lakh crores. Ministry of Health gets 73,932 crores. And I want to tell you something here, because whatever you have read till now, whatever you have understood from other places or from other sources, please be careful. When I actually mention a scheme, when I talk about Ministry of Health, you have to collectively, I have to collectively tell you that what our government is going to spend on the health and well-being. The collective infra, which includes Ministry of Health also, which includes other schemes also. I'll move ahead with Ministry of Railways allocation, that is 1.1 lakh crore. Ministry of Agriculture and Farmer Welfare, 1,31,351 crores, 531 crores. But when you read that 531 crores, you will not be able to retain that. Everywhere you will find it like 1.31 lakh crores. So read it like that. 1.31 lakh crore is sufficient for you. You need not get into this needless thing. 531, I have just written that because students will be asking me that you have not written the complete amount. So 1.3 lakh crore is sufficient. Infra and highways, they are not allocating it to infra and highways straight away. I am saying it is MORTH. It is Ministry of Roads, Transport and Highways. Ministry of Roads, Transport and Highways, that is MORTH. Ministry of Roads, Transport and Highways, that is MORTH. We are saying the allocation here in the infra and highways, that is 1.18 lakh crore. The next point is scheme-wise allocation now. It was ministry-wise allocation earlier. Now we'll be talking about scheme-wise allocation. Scheme like Manrega and every government disputes over this particular point, that our allocation in Manrega was more than your allocation. So it happens. It happened usually. So this time for Manrega it is 73,000 crores. PM Kisan scheme it is 65,000 crores. National Education Mission, they are planning to spend 34,300 crores. So 34,300 crores on National Education Mission. Scheme-wise allocation for 2021-2022, National Health Mission. So Ministry of Health, National Health Mission, will be talking about them. What is the total expenditure? National Health Mission, 37,130 crores. 37,130 crores, that is the allocation for National Health Mission. Amrit and Smart Cities Mission. The full form of Amrit is going to be there in your exam. That is why I've actually mentioned it in capitals. In uppercase, Amrit stands for Atal Mission. AM, Atal Mission. UT is not Union Territory. UT is Urban Transformation. Relate this urban transformation with smart cities, you'll be able to retain it well. So R stands for rejuvenation. I have not written it here. I am going to actually explain that. You will be writing it. Atal Mission for Rejuvenation and Urban Transformation is the full form of Amrut, and you will be actually relating this urban transformation with smart cities. That's how you'll be able to retain UT's full form, Amrut's full form basically in your mind. 13,750 crore is the allocation for Amrit and Smart Cities Mission. Okay. And when we move ahead, Jal Jeevan Mission, and you'll be, looking at it, that Jal Jeevan Mission is written twice. What sort of confusion I'm actually, creating here? No, there's no confusion here. Read the upper part carefully. For 2021-22, the next year, the next financial year, the allocation for the next financial year, Jal Jeevan Mission is 50,000 crores. One year, the next year, 50,000 crores. But expenditure for Jal Jeevan Mission. Outlay for Jal Jeevan Mission urban, 2.87 lakh crores. What sort of confusion is that? There's no confusion. The upper point states that it is for 1 year, the next one. But the lower point states that 2.87 lakh crores allocation, 87 lakh crores allocation is for 5 years actually. 5 years allocation as in for Jal Jeevan Mission urban project, that mission. Let's move ahead. Now important announcements. What sort of announcements were they? Collectively, like whatever was given to Ministry of Health or National Health Mission, whatever was given to them, in total, our government is going to spend on health and well-being is going to be 2,23,846 crores. Total outlay, total expense for health and well-being is going to be 2,23,846 crore. That includes vaccination sort of things also. Outlay for Swachh Bharat Mission. Again, the expense for Swachh Bharat Mission, but that is for 5 years. Yes, that is for 5 years. They have allocated for the urban, product, for the urban segment, urban segment 2.0. That means Swachh Bharat Mission 2.0 for the urban segment. It is 1.41 lakh crore, but that is for the entire 5 years. Disinvestment target. That means the government is going to sell a lot many things. Disinvestment is when government sells its possessions. And generate money out of it. Disinvestment target for 2021-22. That means the next year they are setting up the target that they'll be actually selling their possessions. 1.75 lakh crore is their disinvestment target. Now a few charts are going to appear on your screen. Non-debt capital receipts. So non-debt capital receipts, I'll be explaining that term first. When you see non-debt capital receipt is there, some sort of percentage is bringing money for the government. Read the title before starting. That is, rupee comes in. That means our government earns from sources and then our government spends at a few sources. So I'm saying at a few places. So rupee comes in and comes in from non-debt capital receipts. Non-debt capital receipts. So some percent is spent on that. What is non-debt capital receipts? This includes actually loan recovery and disinvestment proceeds. What does it mean? If our country has given loan to Sri Lanka, some part of loan is paid back from Sri Lanka to India if some part of the loan Sri Lanka pays us back. So that sort of loan recovery is the source of income for our government. Disinvestment, when they sell their PSUs, when they sell their possessions, so that is disinvestment. That's how they earn money too. So NDCR, non-debt capital receipt. So that is actually one of the places from where our government earns. And when we move ahead, we'll actually look at from the places where from where our government earns. Income tax. They say that 14% they earn from income tax. 5% they earn from non-debt capital receipts, which I was explaining a few moments back. Union excise duty, they earn 8%. Corporation tax, they earn 13% from there. GST, they earn 15% from GST. See, it is a chart which states if 100% is there, when you actually just break it up, these are the places from where our government earns. GST is 15%, customs is 3%, non-tax revenue is 6%, and borrowings and other liabilities, from there they earn 36%. Where they spend, they actually spend money on, okay, one of your family members, maybe you're somebody whom you know, they receive pension from the government. So obviously government has to spend money on that pension. So the pensions, they spend around 5% on pensions. When we move ahead, we see that central sector schemes where the government actually comes out with. So they are 14%. That is the place where they spend. Read the words carefully. Rupee goes out. Finance commission and other transfers, 10%, around 10% they show. States and shares of taxes and duties. You understand that when a GST is collected, there's a share of the state also. The state's share is also there. So they have to spend money there also. They have to provide them with their share, with state's share. So they mention 16% share is there where they spend money. Interest payments are 20%. Defense is very important. The share is very important. That is 8%. That's how we guard our borders. We spend a lot on our defense. That is 8%. Where our government spends. Subsidies, I was talking about them earlier. The government spends around 8% on them. And centrally sponsored schemes 9% and other expenditure is around 10%. So such sort of schemes are there. Now, before wrapping up, this is only the first part of budget. Those students who left in between, those who actually watched, some part, I wish to tell you, if you are, here till now, I want to tell you the next part will be uploaded soon. So stay tuned, watch that session also, because even that session is going to be very beneficial for you. This is not the complete session. Here I'm wrapping up and thank you so much for watching.